won't waste too much time introducing myself. Michael Mbaiwa, and I've been in and around accounting for quite a while. I mean, I'm a chartered accountant myself, qualified somewhere around 2010, which might be giving away my age. But anyway, so the format of this webinar is we're trying to concentrate on a few things. First of all, just to give you an overview of the syllabus areas for CIMA F3, and then we'll get some time to talk about the areas where you might find difficulties. And how I've arranged this today is I will give you some examples of typical questions that you might see as we go along, and then maybe at the end talk about an area that students actually find quite difficult. And then we'll get into tips on how to manage your time, how to manage your exam, how to manage your questions, etc. And then, like Kira said, you will have a chance to then ask questions at the end. So in terms of the way I've structured this, the introduction, which we've covered, and then I will go through the overview of the syllabus just to start with, just to introduce the CIMA F3 paper, and then we'll go into a bit of the details of the syllabus itself with some examples. I thought it might be a good idea to just give you examples as we go along, and then we'll then talk about how to approach the exam and what approach you should be taking, and then in terms of revising as well, how you should be thinking about your revision when you're revising for your exam. Now, I don't want to make assumptions, but this is where we are in terms of the F3. This is a strategic level paper. And as you know, you've got that strategic case study that would also then test you in terms of topics that you've covered in all three: your enterprise strategy, E3, your performance strategy, and financial strategy. So now if you notice this is strategic level. So things go up a notch from the management level. And what we're looking at really here at the strategic level is whether you're able to think as a director of an organization and be able to, in this case for F3, look at and analyze and come up and formulate a strategy for the organization. So you're looking at high level information, but you also have detailed knowledge of how each and every area works. And so in terms of the syllabus itself for F3, we are looking at, if I can just click on to move on, you've got 4 areas. So you've got area A, B, C, and D, and it's the weighting is broken down into 15% for policy decision making, and then you've got 25% for sources of long-term funds. So you're looking at your equity and your liabilities, and then you've got financial risks, which again, I'm giving this away quite early. This can be quite a challenging area because you're looking at how do we manage the risks in an organization and what methods can we use, including calculation and choosing options between a few options that we might have to hedge risk, for example. And then we have business valuations, which is quite a good area. Lots of formulas, but it's actually good, and you've got 40% of that. Now, in terms of the exam itself, we're looking at now the aim of this exam is to evaluate your capability in checking whether you are able to develop and execute. So in terms of, are you able to formulate a financial strategy and then also execute it? So you will notice that you will get questions as on my left there, probably on your left as well. It shows you the type of exams that you have. It's a 90-minute, 60 objective test questions, and these are randomly generated. So now, in terms of this, there some of the questions would want to see that you're able to develop a financial strategy, but then some of them you will be given a financial strategy, and you would need to be able to show that you're able to execute a financial strategy, and also just making a decision in terms of making a well-informed decisions. Maybe you have 3 or 4 options that you need to choose from. How are you going to choose that option and what is your criteria for choosing. So what making more informed financing and dividend decisions, but also understanding the corporate finance of an organization. So you're looking at areas such as mergers, acquisitions, risk, and management. And as we saw, these are in our syllabus breakdown. And so that's where we are in terms of the objective of this. And you're going to get questions. And these questions are randomly generated. And again, at this level, you're now used to these questions. So what will be different is not the way of the questions, but the level of the questions, in that these now are strategic in nature and the things that they expect you to be able to do. And so if we can move on, I think it's gone one extra. There we go. And so you will have your multiple choice and response. You have drag and drop. You have hotspot. You have drag and drop. You have multiple choice, etc. But then, like I said, this is now in terms of your strategic. And I'll show you a few examples in a minute. In terms of your strategic, you're thinking strategically. Now, the methods that you're going to see in this paper, most of them are not new. You know them, but then the focus is on the strategic level side, that you're able to analyze and formulate strategic decisions. Now let's go back to that syllabus breakdown again. So now notice here we're expecting that as we look at these questions, we are looking at around 15% of the syllabus is going to be policy decisions. So around 9 questions will be on financial policy decisions. I'll show you an example of a question. And then we have the long-term sources of funds, and then that's 25%, which is about 15 questions. Financial risks, which is about 12 questions. And then business valuations, quite a good chunk of questions there, about 24 questions, which is also a good thing, because that tends not to be the most difficult of the subject areas. Now, what I want to now do is quickly talk about a question approach in terms of when you're looking at these questions, whether you're looking at your multiple choice questions, like in the previous slide, whether it's drag and drop, hotspot, because you've got these objective test questions, there will be questions in there, or there will be solutions that might actually cause you problems, in that they might look like they're the question, but they're not. So before I go into the detailed breakdown of the syllabus, I just want to quickly talk about this question approach, because I will be showing you some questions, and we're going to use that approach to look at some of these example questions. So what you want to do is, when you're looking at these objective type of questions, you want to make sure that, first of all, you're reading the question carefully. In some of these questions, you might have to read in more than once. Read it carefully, make sure you understand the questions, and you are looking for the action word in that question. What is the question asking you to do? Because what you might see is, you might be familiar with these questions, and you might be you might see a question like, say, cost of capital, and you might be rushing to answer the question that is not asked. So you want to make sure that you really read the entire question carefully, and then you formulate your response before reading the options. So you're thinking, okay, this is the question that I have. If I am going to answer this question, I would approach it like this, because, like I said, in the questions or in the answers, there will be some blinders in there, something that looks close to the answer and is actually not. And then once you kind of like formulate what you're going to do and how you're going to respond, you can then look at the options and then start an elimination process. We want to make sure that we look at all of the options and make sure that I'm looking at, this might likely be the answer, this might be the answer, and then eliminate. There will be easy ones that are obviously not the answer. So we want to eliminate those as soon as we can. And then we can make a decision. Then you select the most appropriate option. Now, what might be the issue as well is something that might actually trip you up is the question the action question might say, which of the following is not the option? And then you already formulated your answer, and you end up maybe selecting the opposite. So we want to make sure that we are reading the question carefully, right? And look for these action words, as I call them. It might say which one is not, or which one is always, which one is the least likely, which one is the most likely, and which one is the best, and which one is the worst. Sometimes you might be asked to in order of preference. So we might be talking about, say, in terms of dividend, and in terms of finance, and then we say let's put it in order of preference of what shareholders expect in terms of the return, something like that. So you might make sure that you are reading the question carefully, and you make sure that you are looking at these. So what I've also done in today's webinar is I've highlighted some of these words as we see them, or some of these action words as we're doing it. So what I want to now do is go through the syllabus. I will show you a quick breakdown of the syllabus, section A, section B, section C, and section D. And then I will give you some typical examples that we can see here. So we'll start with A. So with A, it's financial decisions, so financial policy decisions. And so what you're expected to be able to do here is you're advising on strategic financial objectives, and you're also looking at the financial policy decisions and influences on those strategic decisions. What are the things that will affect these strategic objectives? Maybe you already have them, and you're thinking, okay, what if this changes? What is likely going to be the impact? Or what are the things that will influence strategic objectives of certain organizations? So, say, for example, a not-for-profit organization, their objectives are different from a for-profit organization. So things like that. So here's a more detailed breakdown of this. So you've got, like, in terms of here, strategic financial objectives, A1 for the syllabus. So you're looking at different types of organizations and their financial objectives, which is what I was just talking about now. Not for profit and for profit, you need to be able to analyze the objectives of these, and be thinking about a not for profit, for example. They would not use profit, so we'll be thinking about things like value for money, where we're looking at the efficiency, effectiveness, and economy. And then if it's a financial one, we're now looking at financial objectives, your dividend, growing your dividend, profit. But most importantly, because we're looking at financial strategy, profit is not the first one that we always think about when we're thinking about this. We're thinking about maximizing shareholders' wealth, because that's what we're trying to do. We're looking at the financing side of things, and not profit. And then you also have your 9 financial objectives, like what we have talked about. So you would go into detail in terms of like things like human capital, intellectual capital, etc. And then we also have sustainability, which is on the rise as well. And as you can notice here, it shows you that this is evaluation. You're evaluating the reporting framework, and sustainability reporting framework, or the integrated reporting council guidance. And you will have questions on that as well. So sustainability is actually something to look out for, because it's on the rise with SEMA, and they expect you to have more in terms of this. And then we go on to the second one. This is strategic. Oh, my computer is jumping. Apologies there. So we go on to strategic financial policy decisions, and you're looking for finance, looking for cash, and again, it's all around your financial objective. And so I will quickly move on and kind of like show you an example. You've got tax as well, in terms of A3, if you want to call it that. So your market requirements, tax requirements, taxation, and how taxation affects. Now, when we're thinking about financial strategy, we're thinking about the fact, when we start talking about debt in section B there, when we borrow funds, we are saving because we pay interest before we pay tax. We're with saving on tax, what implication does that have? But when we're looking at this in section A, we're thinking about, okay, what if the tax regime changes? What if tax increases? How is that going to affect our financial objectives and our financial decisions? Now, I'll quickly show you a question for section A, and then we'll move on to section B. So here's a typical one here. It says, which of the following is a primary objective of integrated reporting? And what we want to be thinking about here is we want to be thinking, okay, well, what are the main objectives of integrated reporting? But then what we want here is the primary one. So we want to be able to then start eliminating those. So in terms of this, you've got A, to improve the company's short-term performance, and then B, to provide a comprehensive overview of the company's financial and non-financial performance, C, to increase the company's market share in short term, and then D, to reduce the company's liabilities through strategic planning. And then you would then start by eliminating the ones that you think is not correct. Now, so what I've done here is I've said, okay, well, what if you're not sure what the correct answer is? Well, you start by ruling out the ones that you know are incorrect, and then you look for conflicting or agreeing answers, and then you look at the conflicting options. Obviously, both cannot be correct. At this point, you would need to then make a decision, right? So you would need to select one. So if we look at this, it says, which of the following is the primary objective of integrated reporting? Now, with integrated reporting, what we're looking at that we want to make sure that when we're reporting, we have completeness in our reporting. We're not only just talking about profit, we're looking at stakeholders, we're looking at the objectives of the organization and making sure that we're reporting everything in detail. Right. So if we look at this, so it says to increase the company's market share in the short term. That's obviously wrong. C is obviously wrong. And then we look at to reduce the company's liabilities through strategic planning. Not really. But then if we look at these two, we've got A and B, to improve the company's short-term financial performance or to provide a comprehensive overview of the company's financial and non-financial. I mean, at least the A has some short-term financial performance, but at the same time, we're looking at here, would we really only look at the short term? As I was reading this, I was thinking only short term. So the answer would be to provide a comprehensive overview of the company's financial and non-financial performance. And that's what integrated reporting is trying to do, is that we're not only just focusing on profit. So that's an example of that. Quickly move on. I'll try to speed up things as well, just to make sure that you have time to ask questions, so I can answer some of your questions. So B, if I can click on it. So B, we have sources of long-term funds. So we're looking at capital structure theories, analysis of long-term debt finance and equity finance, and dividend policies. And what we're looking at really here is we're looking at what the capital structure of the business is, and this is where we start thinking about weighted average cost of capital and how it can affect all of these in terms of, if we change our cost of capital, if we're going to invest in a project, we know that, let's say we're doing an investment appraisal NPV at 10%. If we increase it to 12%, we know that our NPV is going to go down. So we want to look at the things that can affect our weighted average cost of capital. For example, we might issue debt, and we know from Modigliani and Miller from past papers that if we increase the debt, then the cost of capital is going to increase. But then Modigliani and Miller, they argue that, well, the weighted average cost of capital might actually go down. And so these are the things that we're analyzing. So that's that area. So the second is long-term debt finance. When you're looking at selecting your debt instruments, your debt covenants, issuing debt securities, etc. And then the final one is equity and dividend policy, where we're looking at, we might be looking at theoretical X rights price, giving a rights issue. This is just an initial public offer and understanding How does it affect if we're trying to raise finance? If we issue more shares versus a rights issue, which method is better, and which method is faster, and which method is more economical for the business? And so I actually have an sample question for the exam here, which is this one. Which of the following is a key advantage of issuing long-term debt over issuing equity finance? So we know from Modiglan and Miller that Modiglan and Miller, they're popular for their paper where they wrote that they were encouraging companies to borrow more funds as opposed to issuing equity. And as we know, generally, most of the times, your equity finance is more expensive than your debt. We also know that debt is cheaper because we actually deduct your interest payments before we pay tax. So it's taxes. So we have all these facts. Now we look at these options. A, it dilutes existing shareholders' ownership. So think about those other ones that are definitely wrong. This is one. We don't have dilution of ownership with debt. That would be in terms of equity. Interest payments on debt are tax deductible. Now, with our approach, we were talking about that. You know what your answer is in your head, which is what I'm trying to do here. You've got this tax deductible that we know that debt is tax deductible. So that's a potential one. I'm not going to stop here though. I'm going to read all of them just to make sure I've got everything covered. It increases the company's cost of capital. And then D, debt issuance requires less stringent regulatory compliance than equity issuance. Yes, that could be potentially. But then I go back to the question. It says, which is the key advantage? So the most important one is we want the one that is interest payments are tax deductible. So that's a typical question here. And then I'll move on to here's another one as well, which I'm just looking at my time and just thinking I'll skip this. But this one is looking at which of the following factors is most likely to influence a company's decision to raise finance through a rights issue or a public offering. And we know that a rights issue is much faster, and also it minimizes dilution of control. So anyway, section C, financial risks. So you're looking at sources and types of financial risks, and evaluation of financial risks, hedging techniques for foreign currency risk, and hedging techniques for interest rate. Now, this is the difficult one I've been talking about in terms where students find and struggle with this, especially with the hedging techniques. So when you're revising, you want to make sure that you're practicing these techniques. Not a lot in terms of the syllabus breakdown itself. It's just we're looking at the sources and types of financial risks, and then your financial risks, and then how you manage them, which is your hedging. And then you break it down into your economic and political risks. Not a great deal on that, but most importantly, you're looking at the currency risks and the interest rate risks, and you need to be able to calculate them. So I've got a couple of examples here to show you. So this one is, which of the following is the primary benefit of using currency swaps to manage foreign exchange risks? Now, with foreign exchange, we know that we can have a forward rate agreement, we can have a swap, we can have options. And so you need to be able to know these in details and the advantages and disadvantages. In this case, we're looking at, just for the sake of time, this enables the company to lock in an exchange rate for future transactions, which is what we're trying to do with hedging mostly. And I've got another example for you so that we just don't think it's multiple choice. I've got another example. So here's one. So this one is saying ABC expects to receive 500,000. Now I've highlighted as you start doing your studies, you notice that you really want to understand when you're hedging. Are you receiving or you're making a payment? In this case, we are receiving 500,000 in 6 months' time, and is concerned about the foreign exchange rate risk due to fluctuations in the USD and GBP exchange rate. And you're given the spot rate, and then you're given a 6-month forward rate. Now, notice we're going to receive this money in 6 months' time. So we want to be making sure that we are hedging what our fear is, the rate is going to change. It's going to change. So you notice 1.35, and then now is 1.33 in terms of that. So the pound is getting weaker. So if ABC enters into a forward rate contract to hedge this exposure, how much will it receive? So you should be able to then calculate it. So in this case, I've done the calculation and just put it there. And so that's another question. Yeah. And then moving on to the final one, which is your valuation. A lot of questions here. You've got acquisitions, mergers, and divestment. You need to be able to understand what is involved in an acquisition and in a merger, maybe reasons for acquisitions. Why would the company want to buy another company, etc. And then you're thinking also of your valuation methods. And you also need to be able to quantify these and be able to calculate which one is the most appropriate value in terms of pricing and bid. If we can use different methods here. So generally, we know when we talk about market capitalization, we're just looking at the share price multiplied by the number of shares. Or we could also look at the assets that the company has. With net assets, from the accounting equation, we know assets are equal to capital plus liability, and your net assets, which is your capital, is your assets minus the liability. But obviously, if you have a company and someone wants to buy your company, you're not going to sell at the value of net assets. You're going to be thinking about things about, like, you might have a license, you might have patents, and you might have projects that are going on. We want to be able to work those in. And so that's what this section of the syllabus is looking at. So we are thinking about, first of all, the context of valuation. So the listing of firms, mergers and acquisitions, demergers and divestments, which would be the opposite, and how this can affect shareholders' wealth as well. So with mergers and acquisitions, when we go to our shareholders, we're thinking of merging with this company. We need to be able to show them the bigger picture, that if we merge with company B, we're company A. If we merge with company B, we're going to be a much larger entity, and this is going to increase your shareholders' wealth. And that's what we need to be able to analyze here and then make an evaluation. In terms of the next one, you're looking at now the different valuation methods, which I actually have an example for you, a calculation one. And then you also need to think about the strengths and weaknesses. So I alluded to this when I was talking about the net asset methods, that the net asset methods will look at assets minus liabilities, but that's the minimum that you can sell your company for. So obviously we will not be selling our company for that. So we can start looking at maybe using CAPM. We can use the free cash flows methods. We can use the price earnings ratio method, and all these different methods. And we need to be able to know which one gives us a high value and which one gives us a low value. So the net asset method tends to be the one that gives us the low value. And then the next one, which is the final one in terms of the syllabus, is those pricing issues that I've just been talking about now, in terms of, well, if we are going to be going into a merger or an acquisition, how is this going to be priced, and how is this going to affect debt and equity? Are we going to be paying cash? Are we going to be using shares? Is it going to be a share for share exchange? And then we need to be able to analyze this. And then any post-transaction issues that you might have, not only calculations, but even just merging with businesses, we assume synergies. Maybe those synergies might not actually materialize, or maybe they'll actually materialize and become much better than we anticipated. And so we should be able to think about that. Now, just to wrap this up, so final question: XYZ is considering acquiring ABC and needs to value the company. ABC has forecast free cash flows of 200,000 and expected growth of 4%. And then you've got the weighted average cost of capital that you're given of 10%. Sometimes you might have to calculate it. But in this case, we're looking at the value of a company. We would use free cash flows method, which this is a perpetuity, but a growing perpetuity. So we would look at the free cash flows that we have, the 200,000, and then 1 plus the growth. We're given the growth, which is 4%. And then we've got the rate, or sometimes if it's cost of capital or cost of equity, this would be our rate minus the growth. So with this one, we would calculate it like this. And so we would say the value of that ABC Limited would be around 3.5, they're about 3.5 million. And so these are the kind of questions. Now, in terms of what then students find difficult, we're looking at now then this financial risks is the first one that, I have been talking about and highlighting that when it comes to financial risk, that syllabus C, you want to make sure that you know your methods, you know your techniques, you know the difference with them. And then also time is also another issue that people find, because sometimes we can take time with that. And so we're going to quickly talk about an approach that we should be using here to make sure that we don't waste too much time. And then you've got the numerical techniques that are different from the management level, because now this is strategic level. And then also you need to know formulas. That's why I gave you in the last question, I gave you a bit of formulas. So what I would say in terms of this, to manage this, you want to make sure that you're not just answering question 1, 2, 3, in a linear approach. I would probably say look for the questions that you are much more familiar with, that gives you confidence in the exam, and you approach those questions first, and then you can come back to the other ones in terms of that. So maybe first focus on short questions, that you're most confident with, and then you go on to the longer questions, and then once you're done, you can then go to questions that you're not comfortable with. And obviously you will have access to this, so you can look at this in more detail. So I've put a few notes in there. Obviously you want to make sure you answer all the questions, because if you don't answer questions, especially if it's multiple choice, you've got the choice to just select the question and or guess. If you want to make sure that you're not wasting time, use that approach that we've just talked about now. Start with the ones that you know first, go with the ones that are a bit longer, and then the ones that you're not familiar with, if you've run out of time, then just go with an educated guess. So top tips, I've got 8 tips for you. Tip number 1, obviously, you want to make sure as you're revising, you plan your study time, and then you want to also study smarter, not harder. And you also want to make sure that you set study targets and deadlines. So we already know that in this case, we've got section C is a difficult one. I would make sure that I dedicate enough time to study that one and make sure that I'm at least a bit comfortable with it and not leave it at the end. I would be making sure that I study that quite early. And then your study environment as well. You just want to make sure, especially these days, there's so many distractions. I remember when I was studying, I used to go to the library, and I would only just go in there to just focus on what I'm doing. And then number 5, you want to make sure you book your exam in advance, and you also want to make sure that you practice 30 questions in 30 minutes. That could be a good way to make sure that you're managing your time. So go into a space where you're only concentrating on what you're doing, and just do 30 questions and make sure that you can finish those questions within within the time, so that you understand how you work under pressure and how you're able to manage this. And then also you want to make sure that you take a full mock test and get some feedback, which Learning Signal actually has plenty of those resources that are available for you. And then the final tip is you want to revise the core units that you're weak in. And again, I keep emphasizing section C. A lot of students find that difficult. So you want to make sure that you're revising that, you're testing yourself, and you are taking time to do that. Now, all of these are available with LearnSignal. So you've got all these support and resources that you can use. You got OT and case study exam resources. You always have tutor support. You've got study plans, lectures that you can, but most importantly, you've got a lot of questions, over 1,000 questions for exam practice that you can use, and then Q&A. And you also, I like the fact that there is a WhatsApp group as well for paid students that you can sign up, and then you can always get help. So you can find these on this